In today's video, let's take a look at the potential of the space systems side of the company that is Rocket Lab. What we're going to do for this video is we're going to break it down into three parts. We got the capacity, components, and cost. And to keep the alliteration going, we might as well go with part 4, the conclusion. So let's start with capacity. To get a feel for where Rocket Lab's current manufacturing capacity is at, let's take a look at a clip from a recent interview with Peter Beck on the Pounding the Table podcast. Check it out.
So that was the first company we went and bought. We went and bought Doug Sinclair's business, and then we scaled it from 150 reaction wheels a year to 1,000 reaction wheels a year. And when it comes to building our own platform, we never have to wait for a reaction wheel or a star tracker ever again. Like, there is no supply chain problem. And then we did that for all of the long lead expensive items in a spacecraft.
So before we continue, let's add some context. In April of 2020, Rocket Lab acquired Sinclair Interplanetary for $14 million in cash and stock. In September 2021, it was announced that construction is underway on a production facility capable of supplying up to 2,000 reaction wheels per year. 1 year later, September 2022, production capacity seems to have been updated to 3,000 reaction wheels per year. However, 2 months after this, in November 2022, reaction wheel capacity was mentioned to be at 2,000 units per year again. And now we have this new reference where Peter Beck mentions they have scaled the reaction wheels from 150 units per year to 1,000 units per year. So while there is a discrepancy in the reaction wheel time frame, my take on this is that Rocket Lab is currently capable of producing 1,000 reaction wheels per year, and that they will eventually be able to produce 2,000 or maybe even 3,000 depending on what was going on with the Investor Day reference. Generally speaking, there are 3 to 4 reaction wheels per spacecraft. For reference, we know that the Varda and the Escapade spacecraft use 4 reaction wheels per craft. But in order to find the spacecraft per year capacity, we're going to divide the 1,000 reaction wheel per year capacity by 4. The reason that we're going with 4 instead of 3 is because that's going to allow us to land at 250 spacecraft per year versus the less conservative 333 spacecraft per year. This is also assuming that the other Rocket Lab components are on par with the reaction wheel capacity. So going from 250 craft per year with their 1,000 reaction wheels per year currently, and doubling both of those numbers, we're going to land at 500 craft per year once reaction wheel capacity is at 2,000 units per year. So next up, components. Let's acknowledge that the reaction wheels are only one part of the spacecraft equation. We also need to identify how many Rocket Lab built components are going into each Rocket Lab built satellite. For this, let's hear it directly from management how many Rocket Lab built components are going into each craft.
We'll just use one that's on orbit right now, the spacecraft that we built for Varda for their on-orbit manufacturing. If you look at that spacecraft, obviously designed and built at Rocket Lab, all of the composite structures were designed and built by us. The radio was designed and built by us. The propulsion system was designed and built by us. The tanks were designed and built by us. The star tracker, the reaction wheels are designed and built by us. It's using our solar panels. It's using our software. Really, there's almost nothing on there that wasn't designed or built by us. It's using our batteries, it's everything.
And we have a new spacecraft order on the books for a confidential constellation customer that builds on a strong demand for our satellite products. This particular spacecraft will include a full suite of our own satellite components and subsystems, including star trackers, reaction wheels, solar panels, S-band radios, flight software, and so on and so forth.
In terms of these 18 satellites specifically, our constellation award includes all of the subcomponents we've previously acquired or developed internally, including solar, star trackers, reaction wheels, radios, launch dispensers, and other critical technologies.
So putting this all together, here is a visual representation for the confirmed components in a few known Rocket Lab contracts. Worth noting is that the colored cells are confirmed and the black cells are unknown. So if anything, this could be an underrepresentation of what is actually going into each of these satellites. Part 3, cost. Now that we have a list of the Rocket Lab built components that are going into each of their satellites, we can do a cross comparison of the components that have pricing available on Rocket Lab's website. Worth noting is that this is not a conclusive list. This is what I was able to find either explicitly or implicitly on Rocket Lab's own website or from other viable resources. Keep in mind, these prices are the approximate mid-range for each category. We have the satellite radio at $150,000, star trackers $125,000, reaction wheels $75,000, separation system $100,000, power system $25,000, and solar panels at $20,000. This brings us to a total of $495,000. We haven't accounted for a number of components: composite structures, propulsion systems, tanks, software, and especially labor. Another consideration here is the pricing for the merchant components, the ones that are available on Rocket Lab's website, will already have margins built in. So these are at the selling price and not necessarily what it costs for Rocket Lab to build them. To get a clearer understanding of the pricing for the Rocket Lab satellites, let's take a look at a few known contracts. Keep in mind, these are revenue values. We have Capstone at $2.5 to $3 million. MDA Globalstar is approximately $8.5 million per satellite. The MDA Globalstar optional fleet is approximately $5 million per satellite. But keep in mind, the values that are shown for Globalstar, this is the amount that Rocket Lab is receiving as a subcontractor. So in the case where Rocket Lab is a prime contractor, like for example, this new SDA contract, these satellites are going to be worth a lot more. Speaking of the SDA satellites, those are going to be $27 million each. So quite a big price hike when you're comparing something like Capstone to the SDA satellites. Of course, those are not the same satellites, but you understand my example. There's a pretty large variance there. So all things considered, it's safe to assume that the spread to purchase a Rocket Lab satellite is in the range of $1 to $5 million. So let's put this all together. But before that, if you're getting value from this video, hit that like button. And if you're new to the channel, hit that subscribe button and make sure you hit the notification bell. It really helps out the channel and it's much appreciated. Thank you. All right, so let's build a bear, a base, and a bull case. Starting with capacity, we've got everything maxed out at 500 satellites per year within the current manufacturing footprint. As we go through these numbers, I might throw three numbers your way and say respectively. What I mean by that is we're going to go bear, base, and bull. So for example, the average selling price, we're going to assume $1, $2.5, and $5 million respectively. That is going to be the average selling price for the satellites. The next number that we need is the gross margins, and we're going to go space systems specific. So for that, we're going to jump to a clip that was taken from earlier this week during the SDA award presentation, where CFO Adam Spice is talking about space systems margins.
We typically kind of model a lower gross margin profile than the merchant component sales, but overall they come to a kind of that blended gross margin target that we've long talked about, which is north of 40 points.
Now, when they mention 40%, they are talking adjusted margins. And if you're not new to the channel, you'll know that one of my least favorite words when it comes to analyzing a company is adjusted. So what we're going to do is try to extrapolate away the adjusted by just simply shaving off a few points. In this case, we're going to go 28%, 30%, and 32% respectively. So using those numbers that we have so far, that populates the revenue, the cost of revenue, and the gross profit. Next up, we need to look after the research and development and the sales, general, and administrative, ultimately arriving at the operating expenses. Let's look at the past 3 years. We have 2021 at $100.2 million, $154.2 million in 2022, and we're going to be in the range of approximately $230 million for the full year of 2023. Now, it might look a little bit backwards that we have operating expenses going from lowest in the bear case to highest in the bull case, but my rationale behind that is you're not going to be spending a lot more if you're not making a lot more. Kind of in the same way that if Rocket Lab right now is spending like $500 million to $1 billion on operating expenses, that would be a red flag because of how disproportionate that is to the current revenue. I mean, it already is quite high, but it's justified. In this scenario, if Space Systems is really just not doing that well, I sure hope that they're going to be dialing back on the operating expenses. One other thing that should be acknowledged is this is only going to be for the space system side of the business. So for this whole overall example, Space Systems is basically 2/3 of what Rocket Lab is. So essentially what we're doing for this example is we're splitting the 2/3 off from Rocket Lab that is Space Systems and leaving that 1/3 as launch services. So from here, we're assuming that the operating expenses are not going to be covering Neutron. So operating expenses in probably all three of these examples is a little bit high. All in all, it's not a big deal. Let's continue forward. With operating expenses, we now have access to operating profit and operating margin. Next up, we need to worry about the interest expense. Let's look at the past 3 years. We have 6.1 million, 7.8 million, and approximately 4.8 million from 2021 to 2023. The reason that interest expense is a little bit higher here, it's one of those things that I'm not supposed to say out loud, but I think that Rocket Lab might end up taking on more debt. And I'm not talking about what was just announced where they went from like 106 to like 120 now. They might need to take on a bit more, especially if Neutron is set back, and also just if it's not quite as profitable to start. I don't know. I mean, if Rocket Lab keeps bringing in these like SDA-sized contracts, it's not going to be an issue at all. But I want to be wearing clothes when the tide goes out. I think that's how that saying goes. All right, so final stretch. Now we need to worry about the tax provision. We're going with 20%, 15% and 10% as a percent of pre-tax income, respectively. Now that we got the net income, we're also going to assume that the PE ratio is 20, 25, and 30. Now, these could be very low, and I'm sure that you as the viewer of a company like Rocket Lab, you're probably accustomed to these growth companies like Tesla, Enphase, Nvidia is a good one to throw in there too. They all have PE ratios that would leave some of the OG investors scratching their head. So, I mean, realistically, if the bull case does come to fruition, like Rocket Lab's not going to be sitting at a 30 PE like it's stated here, right? If they are growing, like I don't even know what the numbers are to hit that kind of net income number, but like if they do hit the bull case, it's safe to say that the PE is going to be much higher. But either way, all this together, the market cap for each of these scenarios. For the bear case, we have 1.1 billion. For the base case, we have 6 billion. And for the bull case, we have $18.6 billion. Now keep in mind, this is just for the space systems side of the business. So if you are interested in seeing the full valuation model that includes the electron, the neutron, price targets, all the way out to 2030, be sure to check out the Patreon that is in the link in the description below. Whether you're interested in the valuation model or you simply enjoy the video, the price for the Patreon is that of a cup of coffee. So if you got value from this, consider caffeinating me because Lord knows I need it when I put these videos together. Other than that, I'd love to hear from you guys, so make sure you leave a comment. What else would you like to see me cover regarding Rocket Lab or another company entirely? What did I get right? What did I get wrong? You know the drill. Thank you guys for the hangout. I'll see you guys in the next one. Peace.